From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 16th, 2016. In today's video, we're going to be taking a look at the EURUSD, the euro, versus the US dollar. What you're going to see from today's video is very similar to what we spoke about during yesterday's analysis on the USD CHF, the dollar franc, because we have a similar tone today that we had yesterday. We're watching the news and waiting for a breakout. The news, of course, is highly anticipated today. We have a lot of news coming out today. 8:30 a.m. Eastern U.S. time, we have some U.S. data being released, but I think, of course, more importantly will be the FOMC later today at 2 p.m. Eastern U.S. time. Highly anticipated, and definitely some volatility will be expected, widening of spreads, maybe some slippage involved, so be very careful as you go into the FOMC time later today. If you're not already holding U.S. positions at break even or better, then it might be prudent to wait before getting into any new positions until after that volatility is over and allow the market to absorb that data and then begin moving in a particular direction. Anyway, as we come over here to the EURUSD, the euro versus the US dollar, we're looking at the daily time frame. We can see that for the past week or so, we've had extreme volatility already on this currency pair. We had the ECB last week causing the market to fall down here towards the 0.800s and then rapidly rise all the way back to 1.1200. And then since then, we've seen a little bit of a pullback down here towards the 1.1085 or so level, now finding support right there around 1085. So it's been kind of a wild week, and I don't think that's over yet. I think we will again see today with FOMC continued volatility for this currency pair. If we do see a positive reaction to the FOMC, a positive reaction for the US dollar, we will likely see the continuation back down, retracing some more of this move that we saw last week, pushing back lower. You know, in extreme case, we might even see it challenge back down here towards the 0.800s or lower. If there's any negative reaction to the FOMC later today, we will likely see the turn higher, breaking through last week's high at the 1.1200 level and pushing into new highs here for the euro dollar. So again, watching for that reaction on news later today. Let's go ahead and zoom it on down to the 4-hour time frame, because you can see that it's pretty much indicated in the market that the market is waiting to see what happens today. Look at this so far today, and really this week, we've seen the market's kind of stuck right now between 111.20 and 110.85 or so. So about 40 pips or so. The market's been bouncing and waffling on either side inside that purple shaded area that you see here on my chart. You might even could bring that top of that down a little bit towards 111.15, 111.10, but either way you look at it, it's kind of stuck inside this purple shaded area. Again, positive reaction to FOMC today. We look for the breakout lower, back down to the blue, or even lower here for the euro dollar. So we'd look for it to head lower once again. Negative reaction again, we look for the breakout higher above the purple zone, and I think likely any significant negative reaction, we're likely to look for the breakout above the yellow zone, the last resistance high, and a turn back higher here for the euro dollar. So again, it's all about how the market interprets the news, the reaction to the news, and then we can look for some new opportunities. If there's a good extreme positive reaction to that news, we'll be looking for breakouts underneath support levels, rallies back into resistance to give us opportunities to get back in. We always want to look for lower risk and higher reward opportunities. We don't want to take high risk trades. So in this case, I think there's high risk at the current moment because we're not sure how the market will react to that news later on today. For the most part, the biggest thing that we can watch right now is the breakout of that purple shaded area. Below it, we expect it to go lower. Above it, we expect it to go higher. But again, just like last week's ECB news, it could take a sudden turn. I mean, the first reaction, gut reaction to that news was an extreme fall. We saw about a 100 pip move lower first. You can see that wick sticking down into the green shaded area down here at the bottom of the chart. And then it wasn't until after that that we saw the market had a reverse reaction and pressured all the way back up here to the yellow shaded area. So again, when you think the market's going to do something, be very cautious, because it's very possible it doesn't react in the same way that you expect it to react. So the gut reaction last week was extreme volatility. I would say that we could see that today. Now, it doesn't mean we will. It just means we possibly could see that volatile reaction to the market on any news or surprise statements made by the FOMC. So once again, above 111.20. Getting above that area, we'll tackle back up towards the 112 level, and of course above that, we would look for the market to continue the upside, possibly even back up into the 113s or 114 level. On the downside, we'll run into our first barrier support. I might even squeeze that in just a little bit. Let's squeeze that blue shaded area in a little bit. Get it closer to 110.30, 1.1. That's the blue shaded area. It becomes your first obstacle or first barrier on the way back down. By the way, there's the 200 period simple moving average on the daily time frame sitting very close to that blue shaded area as well, and some Fibonacci, by the way. So that would give us a clue to support there. A significant pressure lower for the euro dollar, and significant positive reaction. We might even see the green shaded area down here in the last lows from last week challenged once again into the 0.800 level. I have a little bit of a bearish bias here for the euro dollar currently, expecting some further retracement of this, but of course, like I said, that's going to need some positive statements made on FOMC. So again, if you're in a trade in a positive position or break even, protect that trade. Don't try to be a hero today. I read something earlier today, something about don't try to be a hero today. Survive to be a trader tomorrow. You know, that's very important on high volatility days like today. So I hope that it all works out for you, and I look forward to seeing you in the live trade room later on today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.